Hello, everyone. Welcome back to the RationalInvestor.com's daily brief or recap. This is our little summary video that we do following the daily brief. Today's daily brief was anything but that, but let's just make sure the YouTube page is running. Hold on a second. This is all right. Looks like it is, so that's good. I think I ranted for about an hour and 20 minutes today. And we covered everything: stocks, commodities, currencies, cryptocurrencies, altcoins, poop coins, whatever you want to call them. Anyway, we look at the whole gamut of the universe. Also, too, we got a whole bunch of events that are happening here all over the next week or so. So my hunch is we're coming into some massive pivot here in the market. And interesting to see some key levels coming into on things like altcoins. So maybe we might even be seeing the beginnings of the end of the slide here for crypto, but we'll get to that in a bit. So as always, I like to load up our little chart deck that I put together ahead of time for you guys. And we'll just go through the story. Like I said, maybe 10 minutes or so here today. Would really like to try and get control of myself on these videos. But, oh well, wish me luck. Here we go. So, start the conversation off, of course, US dollar index, trapped between quite a wise trading range that we've been in pretty much since the end of the summer. It looks to me like bear AB equals CDs are going to take us back down into the bottom end of the range. At the same time, too, though, we had big meltdown. Boom, 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 boom. And my hunch is, to a certain degree, this was almost kind of like a buy the rumor, sort of what was going on in the British pound. That event happened, so then you get to sell the news, and I'm hearing lots of chatter that maybe the British pound rally is done for now, but, you know, that's here nor there. Inside bars, and so now we're in the process of taking back some of this range. So we had this sort of wide range. They washed the tops, they washed the bottoms. I think actually our range right now, you can see that wick up top there. That's super vulnerable, probably into next Fed meetings, that kind of stuff. We should probably see those levels traded too. And also too, you can see a cute little wick right here against this previous structural level. That'll be an important level for us to watch. Then on the downside, we got a cute little tail here that they left, and then ultimately we have this gap all the way down at the bottom. So, you know, long and short of it here, no real trade ideas out of this. And just an acknowledgement that we're parked in a very wide range right now. Risk on, risk off conversations. Actually starting to see the erosion in the bond market that I was anticipating, hoping for, especially on the heels of things like stocks and things like oil all just going parabolic straight up here. This should be inflationary. And actually what I've noticed, spent a lot of time in the daily brief today talking about how actually I see a lot of, this is this chart in particular. I mean, look at these M's. What are we supposed to think if we see the market smiling at us? These are bond prices. So the exact opposite, these are the yields. Look at all the W's. And I've made this argument quite a bit over the past 4 or 5 months. I don't think interest rates are going down anymore. And in fact, I would actually make the argument on a long-term basis, you know, on the long end of the curve, interest rates are actually going up. And we got to get used to that. I mean, in essence, we have 35 years of rising interest rates ahead of us. Oh boy, sounds like fun. So, you know, and I've often mused about what's going to destroy this Vancouver real estate market, which is just absolutely ridiculously stupid, these idiots. And one thing that will absolutely kill this market, because it's exactly like what happened in the United States. Interest rates super, super low. All these borrowers go and borrow money, but they don't realize the bank has them on like 5-year loans. So what ends up happening is those loans roll over at the end of 5 years, and if interest rates crank up, well, all of a sudden, boom, now your monthly mortgage payment is $1,000 or more a month. And if you can't afford that, get the fuck out. So I can see the disaster in the Canadian real estate market developing almost exactly the same way as the U.S. did. And the worst part about it here in Canada is we don't have any control over our fate. At least down in the States, they could go and, fudge with the rules and dilute the crap out of their currency and just throw bags of money at the banks to forgive these bad loans. You can't do that in Canada, so it'd be interesting to see what happens to Canada here. But anyway, now there's a tangent. I thought I was supposed to try and keep this within 10 minutes. Good luck, Brian. Yeah, bling. Good time. We had another one. So, conversation here today, and I've been having this same conversation with you guys for a while now. I firmly believe that the U.S. market is basically going parabolic up into that 1-year anniversary of the parabolic down move last year. And it's interesting to watch the oil market also moving into that event. I can't really comment about either of these markets. You can see they've been one directional. At some point, there's going to have to be a correction here. And I've been thinking, that 1-year anniversary of GAN and all that kind of thinking, that seems awfully coincidental the way the market is going parabolic here. I am long quite a bit of stock, and needless to say, quite a few of our ideas of late have done very, very well. So we've been enjoying a pretty nice, rally, healthy returns on some of our stock picks. So I got nothing to complain about. In fact, actually, maybe I'll talk to you today about stuff that I'm actually wanting to buy rather than have already bought, because I've already gloated enough about my recent winners. But I think the general message here, and you can see the bond market is finally wavering here. If this bond market loses these lows, I think get ready for long-term interest rates to crank up here. So this is we're at a very interesting position here. You can see risk on, risk off. Risk is just going absolutely nuts. The gold market, surprisingly, I got to say, I'm a bit surprised at how firm the gold market has been through this. But at the same time, too, we've been cautioning you guys lately. Look at a lot of the bullish moves have hit objectives. And we're actually in areas where if you're like an institutional player and you wanted to short, well, now we're actually in areas where you do want to hunt those shorts. I don't like the idea of shorting the gold market. Don't get me wrong. I don't like that idea here at all. But, we've got empires that fired on things like Newmont. We had an empire that fired on Barrick. So the big gold stocks are saying, maybe cool your jets a little bit. We got little M's coming in on gold and silver stock indexes. And, like little stocks like Myalio, they've started to come back down to earth a little bit. So if anything, I'm thinking the metals market's on pause here. But, as I said just a moment ago, I'm actually surprised that it is as firm as it is. It's interesting to see the yen doesn't really seem to want to go down much lower. If we see the yen break one way or the other, that'll probably tell us that gold wants to move one way or the other, because I'm a big fan of yen gold sort of thinking. And then, interestingly enough, we actually have Bitcoin here has actually caught a bit of a bid this morning. Imagine that. It's a miracle. Risk on, risk off. Where does Bitcoin fit in this correlation study? Jury's still out, obviously. But let's follow along and see if stocks go absolutely euphoric, parabolic up, maybe crypto can find some sort of bottom here. We were reviewing again, we cover almost everything under the sun. We were reviewing through our daily briefs. And actually I think Kevin even asked me to look at this afterward, but we were looking at the junior stock market. And a lot of the stocks that I play, of course, are on the sort of junior side of the market. And thinking about what are some bullish objectives. And believe it or not, this Russell 2000, I think, is actually projecting way up here. So they actually have an expression. It's called the January effect, where because of tax loss selling and because of venture capital, you actually have a period at the beginning of the market year in January where sometimes the small caps can actually dramatically outperform the large caps. So I'm going to be curious to see whether we get that January effect this year or not. But interesting too to see that, Russell 2000 small cap market, we're not at all-time highs. Politicians go on about being at all-time highs and everything's hunky-dory. But interestingly enough, junior part of the market, which actually represents most of the stock market, actually it's still not at new highs. So if anything, it's got to play some catch-up here. So I do like where I am in the market, the sort of position. Got a bunch of stocks on. Some of these stocks are going absolutely insane. I don't even know where to begin. 507 now. I mean, look at this crazy Java. Here's a perfect example of a small cap stock in the States that's just going absolutely insane, right? 54 cents on the upside today. This is ridiculous. So that's the type of market state that I think we're in when it comes to sort of the junior stock market. Okay, so with that said, like I said, I don't really want to go into gloaters. I apologize. I really shouldn't have done that. But what I do like to sort of show you guys is I don't want to talk about past tense because there's no point telling you about the Java stock. It's gone now. You can't buy it, right? So the question is, what am I buying? And, again, I'm not here to recommend anything. I couldn't give a shit what you buy or sell. That's your business. But I'm just going to tell you what I'm really interested in right now. And here's two examples. So this telegenomics is a classic VCIM, venture cap investment model idea. And I look for very specific criteria. I look for the stock to be consolidated. And if you use a site like TradingView, mind you, they don't show it here. I don't know why. But TradingView, you can see here, they rolled the stock back 1 for 5. Woohoo, love that. Nice, lot of pain. All the old shareholders, they're toast, right? Then they also announced shares for debt, which means that old indebted individuals, they will take the new stock in lieu of the debt, which is great. Cleans up the company's balance sheet, relieves interest payment concerns, and of course has motivated investors. So that's always a good sign. And then lastly, they've incentivized the insiders of the company with stock options. So those are the three criteria of the VCIM that are critical. Roll the stock back, shares for debt, options to directors. There's some value down in there. So I'm very, very interested in this guy. And he's in the biotech industry. And you should look at the chart and go, I guess I can understand why that Beamish guy is interested. I'm not looking for new highs here. That's not realistic. But even if I just do something like maybe a 50% level off of this range, if I go back up to here and I look maybe like sometime into the spring or somewhere looking for that, that's a 10 bagger, isn't it? No, not quite. $1.14 from, I'm bidding 15 cents. I don't even know if I'm going to be able to get the stock or not, but if I can, awesome. And that's a nice, 5 or 6 fold increase. Nothing wrong with that. I'll take that every day of the week. And they used to tell me I'll do this in altcoins and cryptocurrencies and stuff during that bull market. And now I'm doing it in the stock market. Same poop, different pile. Speaking of crypto, here's a name that is in the crypto space, and they just recently rolled their stock back. So, these are, I like to buy stuff that's absolutely on its knees, right? Just looks like crap. Basically, we have a whole bunch of motivated sellers into tax loss selling season. They just rolled the stock back, so they're trying to clean it up. And again, if I can sneak in here at 10, 15 cents a share, this gap right here, that's 62 cents. I mean, if I can get any kind of counter trend rally into Bitcoin halvenings, all that kind of stuff, that's a 4 or 5 fold increase on my money. So these are the kind of things that I'm interested through tax loss selling season to be on the buy side. All right, heading on over to crypto. Fascinating price action. First, never a dull moment. We all know lower highs and lower lows defines a bear market. So we just pressed to new lows here. And if we look at the weekly charts, right, which I do quite a bit on things like the Broiler Chicken Show, you can see, in fact, actually I drew on a potential head and shoulders here. I won't get into that here, but new low. But at the same time too, is this really a good place to go short? I don't know, that's tough. Did like, things like bearish bots setting up on things like Ethereum. It's actually a really pretty setup. It's at its move stop to break even. Did not have its move stop to trailing level yet here. So, if we do come back and actually regain that inside bar failure, then I think the Ethereum short is done. I don't know, because we're in these green boxes here, reload zones within reload zones, all that kind of stuff. I don't know whether I'm really too excited about shorting Bitcoin in here. We did have a bunch of lower time frame short setups, things like bearish bots and stuff that did actually end up hitting their technical objectives down here. But actually we spent a lot of time through the daily brief today talking about how actually this last move lower I think was a trap. So these are those short setups that had their technical objectives hit, coming down against things like 1.618, previous key lows. And when we get down into this area, look at what the indicators are doing. Oh, something's not right here. So this is actually extremely dangerous area to go short here. And we just have a simple rule, and I think it's in all of your best interest in the public to do this. When you see a bullish divergence that is confirmed, and it did confirm right here, if you are bearish, you're best just to leave this thing alone. And sure enough, that's exactly what typically happens. So, we got to let this bullish divergence play itself out. What was really interesting is we saw exactly the same thing happen into last weekend. The market had to play itself out, then it emmed out, and then it broke down and it gave us our next leg. So, as it stands right now, at the very least, if you are bearish, you got to let this play itself out. It's got to finish. And what I'm thinking here is if we actually do just a very simple 50% rule, that high down to this low, then believe it or not, I actually like the idea of Bitcoin actually rallying back up to about 7150 or so. 200 SMA, bottom of value, 38.2, 50%, previous market structure levels, the original breakdown level. I do like the idea of the market revisiting this 7150 area, let's call it. And if we're really lucky, and again, remember yesterday I had said, well, if we're really lucky and we can bod W out here and hold, then maybe we've got some sort of bottom. But the fact that we went to new lows, lower highs and lower lows defines a bear market, blah, 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 means to me that at the very best, maybe this is the beginnings of a massive head and shoulders. But you can see how long this took to develop. So at the very best, we got that's the left shoulder, this is the head, right? So that means, if this is symmetrical, we're probably looking at the very least some sort of test of that shoulder level, like way over here, right? That's well into the new year. So what I'm sort of thinking here, for whatever it's worth, is counter trend rally back into market structure failure, clean up bearish divs, and then we'll see. And what I really do like, I've seen this in years gone by, is those guys, especially the Chinese, because they don't really celebrate Christmas. They love to rally Bitcoin into Christmas morning. All the kids get their toys. All the kids, the teenagers get wads of money or whatever, Apple Pay cards, all those kind of fun things. They go jump on the computers and they go, I want to buy this coin, I want to buy that coin, I want to buy this coin. So they get the market all nice and uppy, and then once that sort of hangover or, the buzz is done and they've spent all their money, on the other side of Christmas, look out. So that's sort of the message that I've been giving site people this morning. Is I do believe that short trades played themselves out. Very dangerous to get sucked into new shorts here, especially on bullish divergences. Divergences have now been confirmed. And really what we were even suggesting, I don't know whether you want to use this Bybit. You can look at any one of your exchanges. But I actually do like the idea that if we pulled back against these candle body lows here, notice that right there. And of course, if we do things now, keep in mind, I don't really like talking with you guys in the public about lower time frame setups, but you can sort of see the drawings on the chart here, and hopefully you can follow the logic. I wouldn't be surprised if there's actually a cute little trade on the long side that sets up nicely here. We'll have to see whether these divs have played themselves out, if they're still valid. But believe it or not, candle body lows, those tails, I actually don't mind the idea of our sort of advanced traders hunting long setups down here, like El Tangonators, looking for that counter trend rally up into the 50% rule. So that's sort of what these boxes are. Over the short term, I think this is support and this is resistance. And like I said, doesn't surprise me that heading into that Christmas event, I actually think Bitcoin will catch a bid. The question ultimately is, what does the market look like on the other side of Christmas? The only other thing I wanted to mention here, and you can see, so breakdown to new lows, counter trend rally. Breakdown to new lows, this one took a few bars, but counter trend rally. Breakdown to new lows, what a surprise, counter trend. Excuse me. Excuse me. Break to new lows, counter trend rally. That shouldn't shock anybody here. And in fact, for our more advanced traders, there is a futures market setup that I think actually it was exactly this trade this morning. And, sort of dovetail that. I don't want to go too far down the rabbit hole with you guys this morning. But, of course, we always like to take a look at this CME chart. And it's fascinating. This gap still has not been filled in. And, they actually had the opportunity. And I remember when we were old stockbroker days, we used to always say, look, if they're going to take it down and stay down. Finish the day on its knees. That's it. The end of the bear. All of the sellers have sold. No buyers. It's over. But what did they do? They took the market down to new lows. They tried to fill in the gap, and now they've launched it back higher here. And the problem is this is still an open gap, right? From here down to here. That's still open. So what it means to me is we're probably going to rally back up, fill in this gap, maybe even play with these wicks, and one more dump to fill in the gap. And maybe they even do just a nice big FU to clean out some liquidity through here. So I still don't think the CME boys are done here. So just be cognizant of that. And like I said, post-Christmas rally, and I've sort of put this out to the community, I've asked, when does the Chinese New Year start? And I know that's a relatively long window, but I often find that Bitcoin pivots through that Chinese New Year. So I'm thinking counter trend rally, Christmas, into the end of the year. That Chinese New Year starts, and then we have our final dump to finally clean all this up. As I had said earlier, there was really only one other thing crypto-wise that I wanted to talk to you guys about, which I really do like. And that's the idea that we've been watching Litecoin through this whole market. It led the way up and it led the way down. And notice this AB equals CD has been floating out here forever. And hello, ding, 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 ding. You can see the original market bottom, and even if we go off a clothesline, I mean, look how close these levels are here. As well, too, you can see we're starting to finally get back into sort of POC neighborhood. So, I believe, again, end of the year, Saturn, Pluto, cross, 1 year anniversary from basically trough to trough. Remember that stock market was like literally 1 year from bottom to top. I got a funny feeling that basically most of this correction's done, which is good. I mean, it was a pain in the butt to have to sit here and tell people, sorry, you missed the boat. You cannot buy. You have to wait for it to come back down to the bottom. Well, here we are. And I do like all of this sort of celestial setups And of course, we got Bitcoin halving event coming up, and it's been a 2-year bear. I'm getting the feeling like we're probably getting close to some sort of secular pivot here. So, all right, so interesting conversation about how Litecoin may have actually hit a massive technical objective, implying that maybe some of this slide is done. So, good to see. Okay, guys, I think I'll leave it at that for today. I hope you enjoyed the offering. Who knows how long I was. Bet it was over 10 minutes. Have a great day. All the best, and bye for now.